Okay, let's get into the stock market technical analysis. This is the first video I put out for the public channel this week. I did put out a private member video earlier this week. So if you guys are interested in getting additional market insights, additional trade setups, link in the description below for that private member group. $5 a month, check it out. Can cancel anytime. All right, so we'll look at the S&P 500. We'll look at the triple Qs, gold, obviously. And I've got a couple just various trade ideas I want to go through. So here's what we got on the S&P 500. I'm starting with this one today just because the chart is very clean. It's very clear. So I do want to look at that. We have on the daily chart a bearish rising wedge. All right. And that is a bearish pattern that most likely, the probability, breaks to the downside. It's like 80% of the time these things break to the downside. There's no guarantee 100% of the time, but they do typically resolve to the downside. And the major target for these things when you do break to the downside would be the widest part of the wedge, which we've got, you know, it's really, I mean, about the where the wedge is created, but basically right about there. Take that at the point of the breakdown, and our major, that gives you your major target. So we're looking at somewhere around that 538-ish because we've got horizontal support right through there. We had several reactions. So that's the major target. All right, I think we're heading down there. That would mean the S&P 500 from where we're at now over the next, weeks, essentially, could take months, will be down about 7%. All right, that's kind of the measured move for this pattern. So what do we have? The bearish rising wedge. We broke yesterday. We broke down on the wedge yesterday. And we are basically, we should continue lower. That was a sell signal. I pointed that out to the private member group. Here's the hourly chart, just to kind of show that. On the hourly chart, you can see support, 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 and break. All right, so now it's sell the rip. All right, we're gonna rally, especially the first dip, because the dip buyers, they just buy any dip that they can see. And so that is, you get a dip and then the dip buyers step in. But we should get sold into. Now we could back test. We could back test the wedge all the way up here. That's always a possibility. Whenever you break, you can always, sometimes you just roll over and sometimes you back test. So possibility to maybe back test, put in a new divergent high and then roll over. Keep an eye out for that. As of right now, on the hourly chart, you can see that we're basically kind of sitting right at a key level, because this was a level of support right about 578.71 as a level of support. We broke down yesterday, rallied. They weren't able to recover that level. Today they gapped it up, but it's still just pretty much sitting right at that level. So okay, if we continue to break down, that's basically just a, because we're closing, it's all about the close. It's basically a break of support and then closing right at resistance, okay? Now, if we start to get a green candle and we maybe get some sort of a close above there, then yeah, I think that could set us up for that back test, all right? So could go either way. In general, though, it's sell the rip. So it's no longer by the dip, because we should over time head lower down to that, that 565-ish or sorry, is that the major target? I have to go back to the daily chart. We should over time head down to the right down here, down to 538-ish. All right, that's the major target for the wedge breakdown. Looking at the S&P 500 futures, ES, this one still looks like it's in the wedge, but if you draw it very similar, you could mark it like that, and that would basically be a breakdown of the wedge that we had yesterday. And I actually like that better. You have three distinct reactions, and then you did break the wedge right there. That was a sell signal yesterday. You can see even today, look, they rallied it up right into resistance here, and they've been selling it. So it's sell the rip. That's what I'm talking about. As you rally, which again, you will rally. In downtrends, you always rally. Typically, you're going to shake out shorts. We rallied into resistance and boom, selling, sell the rip. So we should head lower there. And then, you know, if you're trading that, the measured target is the widest part of the wedge, which, you know, at the point of the breakdown sets us up for a move down to, you know, it's about 5508. We do have some, yeah, so we'll just go with that, about 5,508, and the 200-day moving average. That's the measured move, okay? Triple Qs, looking at the daily chart, and we'll get into Tesla. I know there's all this, anytime we have some sort of move on earnings, a big gap up or down, it kind of hypercharges the bulls, but we'll get into that because technically I don't think there's any change there. On Triple Qs, we do have, you know, the biggest thing on Triple Qs, because we don't have as clear of a pattern, but if you mark out, you could have something like that, which would be the kind of a bearish rising wedge for Triple Qs, which hasn't broken down yet. All right, you can see we're still within that wedge, and that's why the market's not really gonna go anywhere. We're not gonna see a big sell-off yet until Triple Qs breaks down. But on Triple Qs, the biggest thing is the bearish engulfing, which is the all-time high in Triple Qs, still holds as the top. So when you see a bearish engulfing after the end of an extended uptrend, especially if you have negative divergence in play, which at that time when we made that all-time high, it was a divergent high right there. That's your negative divergence. Then it's, you know, you can mark that as a top and trade it as if it's the top, and then if you get a daily close above it, it's not the top, you stop out. So it's very programmatic, you know. It's just you see it, you take the trade, exit if you're wrong, you know, and otherwise trade as the top, and boom, it fell right to support. Just that was the trade. All right, if you took that trade, traded that, even if you waited to the end of the day on that bearish engulfing, you made about 11-12% on the indices. All right, and so that's a pretty good sized move for you know, a trend. Now we fell right to support on the Triple Qs, and this is longer term support. All right, support, and that has not been broken yet. So this bearish rising wedge that we're in right now, widest part of the wedge is about right there. You could even probably run this down to about there, but no, we'll just go with that. Then if we break, that's going to basically tell, you know, if that wedge plays out, then we're actually going to be breaking the long-term trend line in Triple Qs. And if that happens soon, I mean, I guess if we just continue on, but in general, we're not, this wedge patterns, if it plays out and we break to the downside, we're going to break that long-term trend line. So something to watch for. Now, I do fully expect the bulls to try to hold that. So I think the way it'll go is probably a bear flag. We'll probably rush down to the trend line, flag out for a little bit, and then continue lower. So that's what I'd be looking for. But as of right now, bigger picture, we have not broken the bearish rising wedge in Triple Qs. We're still within the wedge. So you don't fully have a sell signal on Triple Qs. The biggest thing that you really have if you want to shorting this is, you know, is that all-time high. You know, you're shorting against that all-time high. So do they buy it and push it up and make a new high within this wedge? It's completely possible. When I look across the board at some of the components of Triple Qs, which are pretty much the market leaders, NVIDIA, it's just flat today, not really doing anything. Again, NVIDIA has this, you know, you had this bearish rising wedge. Now that was negated, all right, because you did get the daily close above there. So in general, NVIDIA could go higher. I don't see, we're just kind of sitting right there at that level. It's about 139.67. That's where the buyers should be stepping in, because it, you know, that was your former high. We broke above it and we're back at it. So we'll watch to see if the buyers decide to step in today. But, you know, as of right now, NVIDIA is pretty much flat. And just the rest are flat. So the only one that's really moving is Tesla on earnings. So let's take a look at that. Tesla, again, big gap up on earnings. And again, I wasn't really shorting Tesla. I hadn't really been talking about Tesla because it wasn't objective to really be short Tesla into earnings. It's just not an objective play to take something into earnings. Clearly, we weren't at a key level of resistance or anything like that. So now that we've gapped up on earnings, looks like they're pushing it back up to the downtrend line. So here is the daily downtrend line on Tesla. You've got resistance, 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 and they're pushing it back up there. So until that breaks, that's resistance, and we are in a downtrend. All right, Tesla continues. Every time it hits resistance, it's a lower high. It continues to trend lower over time, and nothing has changed. So regardless of the move today, it's objective. If they want to push it up into that resistance line, it's about 250 today. If they get there today, be a pretty good size move, but Tesla can do it. 257.80-ish would be the level of resistance. Where that's objective to short right there. All right, that would be the objective short. So, all right, look for that. And then obviously, if they break out and it continues higher, that changes the technical picture. And, so one way to trade it is you can short at resistance. If they break it above, and you have to give a little bit of room, they'll probably try to intraday maybe pop it. But ultimately, as long as that holds, that's a very objective level to short for the next move lower. So again, when we start pushing lower, or if we do in Tesla, let's say we're down here, we break below these lows, you don't want to be shorting. I mean, that's not the time to be raging bearish and shorting. That's really the time that you took a short at the objective level way up here, and you're looking at where you're going to exit and take your profit. So just like when you're way down here, it's not objective to short. It's objective to short at resistance or breaks of support, neither which we had yesterday going into earnings. So, but we do have that today, or we're close. We're close to having an objective trade today. So, all right, that's it on that one. One thing I also forgot to cover, Nasdaq Futures. Same look as the Nasdaq, as the triple Qs, but you can see we're in that bearish rising wedge. We're still in the apex of the wedge. Right there. So we have a bearish rising wedge. I think there's an inflation reading. I'd have to check the economic calendar, but I think there's an inflation reading coming out tomorrow. And it looks to me like that's where this thing's going to break down at. We're still in the wedge. Probably not going to break today. Maybe at the end of the day it could break down. But in general, it's still within that wedge. So we could gap down tomorrow on that inflation reading. That would be the sell signal, the complete sell signal in triple Qs. At that point, we'd have a sell signal in SPY. We'd have a sell signal in triple Qs. The market should continue to flush lower. So probably going to hold up today as long as the triple Qs is within this wedge. Okay, some sector analysis. XLV, healthcare, second largest sector. You've got, this is on a sell signal. You can see support. Support. There's another reaction, and your sell signal's right here. All right, boom. Sell signal in XLV. All right, so it's sell the rip. Whether we rally and do some back testing, all right, that's possible, but it's objective to short. So it's not buy the dip in this one. It's really, to me, it makes sense more to look for objective areas to short. All right, and so this one likely will head lower when the S&P 500 heads lower, but that one is on a sell signal. The trend is broken. Okay. XLF. This one, you've got an upward channel basically, and you are just diverging, continuing to diverge. Look at the momentum just dropping. All right, and you have negative divergence in the momentum. We're basically at resistance, or we were a couple days ago. That's resistance. So from my perspective, this one probably heads down to the bottom of the channel. That would be a drop of about 5%. And then we'll have to see where the S&P 500, the SPY is at, and the triple Qs is at. For now, that's kind of the move that I would see is heading down to the channel. Could break, but we don't need to worry about that until we see that. XLP, consumer staples, uptrend. You can see we've clearly got we've got a upward trend line. Lots of reactions. I don't need to circle them all. Negative divergence, pretty well defined. So that's your last divergent high there. Could push up for another divergent high. We don't have a sell signal. Do not have a break of trend. So this one's just on watch. It is, again, it's at support. So the only trade is really to buy it, all right, at support. But you do have that negative divergence telling me that it's going to break that support soon. And with the S&P 500 breaking on the sell signal and the triple Qs looking like it's in a short setup about to break, this one's likely going to break soon as well. So I would put better odds that it actually breaks the trend line sooner before going up to make a new divergent high. All right, that's where I'd be putting the odds. But personally, and what I talk about on my channel, we can't take a trade on this based on what we think is going to happen. I mean, sometimes you can front run it, but I think it's the sell signal doesn't come till you break that trend line. So that's it. XLC, which is your communication sector. Let me kind of adjust that, just basically right there. Mostly meta. All right, this chart's basically meta. Support, support, support. So they've just been buying support. We have some divergence showing up. All right, you got negative divergence there. So these are divergent highs. Again, it's going to go the way of the SPY and the triple Qs, but we have to break that trend line for the sell signal. So this one's probably going to drift down to here, and then they'll, the buyers will battle it out there a little bit, a couple days maybe, and then ultimately I do think it breaks. We might be able to put in a little bit of a wedge right here. Yeah, a little bearish rising wedge right there. So yeah, that one looks like it's a short setup, not actionable yet. Home builders, I pointed this one out in the private member group earlier this week, XHB. We have a sell signal here. So there's your bearish rising wedge, all right? And there, your sell signal came 2 days ago on the gap down and impulsive sell off. That is the sell signal. Here you closed right on support and then gapping down on Tuesday. So this one's on a sell the rip sell signal. Resistance is right about 119.77. It could backtest, maybe not. You never know. Could gap fill, but in general, rallies should get sold into. So that's what I look for. If it rallies into resistance, it's objective to add. It's not objective to short necessarily right here because you're just not at any key level of resistance. But if it does rally into resistance, you could short for the next push down. All right, so that's what we have on that one. And then like the stock I've been looking at, which was Pulte, that one was down like 7%, I think, the other day. But in general, you can see here, same thing. Bearish rising wedge. Negative divergence showing up. And sell signal on the big gap down. Boom. So now you're getting a little counter trend rally, but it's sell the rip. All right. If it wants to rally into resistance, that's fine. It should continue lower and trend lower. All right. So what happens is the big down moves come quick. So most people aren't able to catch them. And then it rallies and shakes out, the late to the party shorts. But this one just got started. All right, this thing is just broke down. So we're having a little counter trend move. Widest part of the wedge sets us up for a push down to about 120.55 is the target. So again, I think this thing, I don't think we're going to backtest. Maybe we do, but it doesn't look like it. I think what we do is we just little counter trend move and then we just push right on down. So I believe this has some, from where we're at right now, about a 11%-ish downside to that target. And that's all I have on that one. And just to give you guys an example of kind of how, I'm putting out videos all the time, and typically stocks go up, 80% of the time stocks go up, all right? That I'm not denying that. But when I look for shorts, the way it typically works is stocks will move higher. You can see right here, this is basically going almost 2 weeks or almost a month worth of time. So if I'm putting out videos constantly talking about, hey, this is going to be a short, for a month, it's kind of not going down, right? It's kind of grinding around and then even pushes higher. So in general, if you're long, you don't get out of the trade because there's no sell signal, and you also don't, and then you also feel emboldened as you continue to push higher. But then what happens is basically in a matter of, basically one day, the whole month worth of gains is wiped out in a day, all right? Actually more than that, really. So that's typically how the short side works. You'll push up for a month and then wipe all that out in a day or two. And so that's why when I look for a short trade, typically I'll talk about it for a while and it'll continue to kind of move, continue to set up but not trigger, and then it triggers. So I think the downside will be quick. I think we're going to be all the way down here relatively quickly on this one and going back to the August, early August levels on that. in probably a matter of, a week, maybe two. Costco's on watch as well. This has a pretty clean chart. You can see this one, support, and holding that support right there. So it has very well established, well-defined negative divergence, and it's in a bearish rising wedge. So does it push up and make another push up within the wedge? Maybe. No sell signal, so we have to kind of wait. Earnings is out of the way though, so this one will likely break. If we get the triple Qs starting to break down, that's when this one will likely go. So it's just on watch. It's, again, you can see they're just treading water here, holding support. So I'm just kind of keeping an eye on it. I think it'll break eventually. We'll get a breakdown, and then that would be the sell signal. And the major target, widest part of the wedge, should set us up for a push down to, it depends on when it breaks, obviously, but I like this one right here, that level right about there. It's about 788-ish, somewhere right in there. And you got the 200 just above. Abercrombie and Fitch, I like this. It's not really objective to short right here and now, but if for a trend trader, I think this is going to continue to trend lower. On this one, you can see we had just pretty much a parabolic move up right into this. This, to me, look at the volume on earnings, big spike volume, big push up. That looks like a buying climax. All right, that means that looks like everybody who wanted to buy that thing bought it on that day, on that huge spike up. And that oftentimes will mark a top. And then we basically have been trending lower ever since. So you can see I've got this downtrend line now. We got a third reaction. So to me, that's, it looks like we're going to trend lower over time. We're kind of putting in a triangle as well. So maybe we compress within that triangle some more. All right. And then break one way or the other. So yeah, that's what I have on that one. If you wanted to wait, it's objective obviously to short at resistance, which was, back here at that level. Or if you break this, to me, this looks like kind of the support. So if you break that, the short, that's a short. So short here, short there. You could go long here. All right. If you're bullish, you could go long there because that's support. And that's it. FITB, another one that looks like it's getting ready to break down. Big bearish rising wedge on the daily chart. All right. I've got lots of reactions along the support. We're just kind of treading water here. Could be bear flagging. All right, we're gonna know soon. So it maybe tomorrow flagging out, and then boom, impulsive breakdown. That would be your sell signal if you see a big impulsive breakdown in the FITB. The widest part of the wedge goes all the way back here. So that sets us up for a major target if we break soon. So let's say we break tomorrow. That sets us up for a push all the way down to, I actually have to adjust this. It's really about there. It's about 31.30. All right. So I like that as a trade setup. Not actionable yet, but again, we're at the apex of the wedge where we should see this kind of do something. And if we do drop, it's about a 28% drop to that measured target. So very good trade setup. It's on watch. All right, gold. All right, so gold has a sell signal today. Newmont came out with earnings. They missed. Again, this had been a short setup for a while. Bearish rising wedge. Little false breakdown right here. A little whipsaw false breakdown. They recovered the wedge right into resistance. But again, it entered into earnings in a bearish rising wedge with negative divergence in play. And it was high probability it was going to sell off. Now, it's down 9%. That's a good sized move, and we're at support though. It's hitting that first level of support. It's under it slightly, but I suspect the buyers step in and they kind of hold that. So keep an eye on that. But in general, the largest gold miner, Newmont, it has triggered the sell signal. We've been watching it for a while, and it is now sell the rip in this thing. So going to the GDX, you'll see here's the index. This one still in a bearish rising wedge. All right, this is clearly still in a bearish rising wedge. Has broken this little uptrend here, and so again, I think it pushes straight down to the bottom of the wedge. All right, and then ultimately we'll break this wedge because it's a bearish wedge with negative divergence. So for now, first move, probably straight down to the bottom of the wedge, maybe another bounce, and then I think it does break, but we have to wait for that. Okay, that's all I got for today, or at least for this morning, guys. I'm going to get the video out. Drop me a thumbs up if you're finding value. Feel free to check out the private member group, link in the description below, and I will catch you guys on the next one.